Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be talking about dividend stocks. So every week on Wednesday, I make a video called Stocks with X Dividends Next Week. So we're going to go through, get about 30-40 stocks. We're going to screen these stocks looking for a price to earnings ratio under 25, yield over 2%, rising free cash flow, revenue, and net income over the last 10 years. And then we'll go ahead and break it down from about 40 stocks to a good 3 to 6 stocks normally. And then that's a good point where you guys can then take a look at, instead looking at 40 stocks, you have 4 to 6 stocks, somewhere in that range that'll have a price earnings ratio less than 25, which is below the S&P 500. You also have a dividend yield of 2% or more. So if you invest $100, and you can get capital appreciation, but you're also going to get $2 per year for that $100 invested. So if you up it to 1,000, that's 20. If you up it to 10,000, that's 200. So you can invest your full amount of whatever you want to invest with using M1 Finance, because they do allow partial shares. I have a video playlist on M1 Finance if you guys want to check that out. So let's go ahead and get started. Of course, if you are brand new to my channel, I do make stock market investment. I'm getting into real estate now, so I'm going to be making some real estate videos very shortly. I'm putting together a sort of list of them and kind of creating them. It does take a little bit to make them out because I have notes everywhere on this stuff. So yeah, stay tuned for that. So let's go ahead and get started. It's 12:20 in the morning right now. I just finished working on some stuff here. So anyways, on dividend.com, this is a great website to use for all things dividend related, dividend stock related. Now we're going to be screening for X dividend dates. Now next week is April 30th through May the 4th. So very interesting dates. So let's go ahead and adjust it. So here we're looking for some common shares, and let's go ahead and select from the 30th to the 4th, and all we have to do is select search here. And now I'm going to go ahead and sort by the DARS rating system. Now if you don't have the DARS rating system showing up right now, all you need to do is create a free account on dividend.com, and you'll be allowed to then see the DARS rating scores. So all I've done is sort it from a 5.0 all the way down to a 0.6. Now you might be thinking, what does the DARS rating system rate it by? Well, if you just open up best dividend stocks on that page, down towards the bottom, you're going to see the DARS dividend advantage system. It basically it measures the strength of the stock. If it's trading above the 52-week high, near the 52-week high, the overall yield attractiveness. It doesn't want something below a 1%. It doesn't want something above a 10%. It measures yields like around a 2 to 5%. It's a very healthy dividend yield. Dividend reliability. Are they going to continue to increase? Are they going to continue to be able to pay out the earnings based off the earnings per share and the dividend payout? Are they going to have a reliable payout ratio? How dividend uptrend with the how long has that company been increasing and continuing to pay that dividend? So earnings growth and dividend uptrend. So here you can see the measure is 4.6 to 5 is highly recommended, 3.6 to 4.5 is recommended, and neutral is at 2.6 to 3.5. So normally I like to grab everything above a neutral of 2.6 and then add it into my Y chart. So first of all, if you haven't checked out dividend.com, I'll go ahead and link a video in the top right corner to check that video out, because it shows you how X dividends on the X dividend date, how the stock dividend gets pulled out. What did I do here? Oh, okay, I'm on the wrong tab. Okay, so back over to this tab here. So here we're starting at the top. So there's many stocks here, many of which I've never really heard of. We have Boston Private Financial Holdings, Bank of New York Mellon, S&T Bancorp. So there's lots of financial companies. There's Intel in here, and a few others. So the reason I like to do this X dividends with stocks with X dividends next week is this gives me a variety of stocks that I've never heard of. They're not on the media. They're not talked about. Many investors don't even look at these ones or glance at them because they're not on the media. They're not getting blasted every day. Google, Facebook, it's not one of those crazy ones that's out there on the media getting publicized. So it's not going to have as many ups and downs a lot of these times. Intel does, it's a pretty well-known company, but all we're going to do is take the ticker symbols and go to Y charts, and we're going to begin entering them in. So BPFH, boy, I cannot type right now. So all we need to do is go ahead and type it in like that. Now I'm going to go ahead and pause the video, and I'm going to be entering all the stocks in from a 5.0 all the way down to a 2.6, which is a neutral rating. So I'm going to go ahead and pause the video, otherwise these videos turn out 30 minutes long, and I'll be right back. Okay, and I'm back. So I'm actually trimmed it down. I'm not going to go all the way to 2.6. There's a whole lot of stocks here. So I went down to the last 3.6, which is AMP, which is right here. And that is the bottom of the recommended list. So I didn't go into the neutral. We just have so many stocks. It's already almost 12:30 at night. I didn't get much sleep last night. I was up working really late last night doing some network work. And let's go ahead and flop over to Y charts now. So I have a whole video on how you guys can access Y charts from my website. It's a link on there underneath tools, I believe. And then once you click on the link, you'll go ahead and head straight to Y charts. You'll have all the financial metrics that I use for this sort of screening process. So next, we have lots of stocks here on the left-hand side. We can only screen about 10 stocks at a time, so I just start towards the bottom and I go ahead and uncheck all these stocks besides about 10. So I'm going to go ahead and enable total return price. That's one I don't remember adding. Anyways, I usually use PE ratio as my first metric that I like to screen by. So I go ahead and deselect all these stocks here until I get right about to 10. And right around 10, you're going to see that the chart begins to display information. So all you want to do here is look for ones that have a PE above what your limit is. If your limit is 20, if you're looking for something underneath 10, if you're looking for something at 25 like I am, then go ahead and remove anything above what your limit is. In this example, we're using 25. So Hasbro, which is here in the black, it's black on the top right here, so you look for the black one, which is the last one, and it's the last one on this list, so it's the last one is checked over here, and all you got to do is remove it. So again, blue is the top, go ahead and remove it. So this is the next process here. We're removing Intel with a 26.26. Some of you guys think, some of you may think that 26 is not too high. I just go ahead and stick with my screening process. So I've already screened a few and removed them from my list. All I do is rescreen, recheck the next group of 10. Again, look for Aon here and go ahead and remove it. Orange is second from the top. Then we have a purple, which is the bank. It's the fourth one from the bottom. And there we are. We have the next batch. So I'm going to go ahead and pause the video once again and continue doing this process. This is going to allow me to, I don't care about the names right now. I don't care what the company is. All I care about is the financial metrics right now. Once I have the financial metrics out of the way, then I'll take a look at its free cash flow. That's part of the metrics as well. It's free cash flow, it's net income, it's yield. If it's been profitable, then I'll take a look at its 10Ks, its last quarterly reports, its balance sheet, and where it's money. Right now, I'm just worried about the financial metrics as my screening process. So I'm going to go ahead and pause the video. I have about 20 left to screen, and I'll be right back. Okay, and we are back. So now I have my screening process done. So all these stocks here, we've thinned it down from roughly 40 or 50 stocks. Now we still have quite a list at 25. Next, I come down here towards the bottom underneath my financial metrics. And I'm now looking at dividend yield. Now I want to go ahead and remove anything below a 2.0 dividend yield. So that's actually going to remove quite a bit here. So again, all I do is look at the color here and look at where it's located at on the left hand side and continue to remove these. So this is going to allow me to start off with the different average it's gonna this whole process. So I'm thinning it down to 2% or greater because when I start investing in dividends, I want to have an average dividend yield of, between 2 to 6%. I think is a healthy range. When I initially started my dividend portfolio back in July of 2017, I aimed for a dividend yield of around 4%. This would allow me to have, $4 for every 100. It would allow me to have $40 for every 1,000, and for every $10,000 invested, I would get $400 back in dividends. But that would be my initial. I believe, I think, yeah, $400. I have my handy dandy calculator here, and if I go 10,000 plus 4%, that's $400. But that's your initial starting point. Now, the great things about dividends, it's similar to dividend stocks, are similar to just like a rent. If you have some real estate and you buy, it's similar to a dividend stock, because as long as you hold that dividend, as long as you're holding a very like a dividend aristocrat, for example, they've been paying out dividends for 25 years and plus. Every year they're going to be increasing the dividend by a certain percentage, and sometimes they can pay out special payments, such as Ford. Ford likes to pay out special payments at the beginning of the year, and then they have their quarterly payouts as well. So a couple examples out there of stocks that have paid out dividends for more than 10 years are Johnson and Johnson and Procter and Gamble and Kimberly Clark, ADP. Those are a few to name a few there. So as I'm chit-chatting, my brain's trying to think, and I can't screen these as fast as I would like. So I'm going to go ahead and pause the video, and I'm going to go ahead and continue to remove any of these stocks here that have a dividend yield underneath 2%. I'm actually just about done, so I may as well just kind of keep you on the line here. You know what? No, because last time I did this whole update, I had a long video, nearly 30 minutes, so I'm going to go ahead and pause. Okay, we're back. So that didn't actually take too long. We're at about 12 minutes now in video time, so that's actually very nice. So all these stocks all have dividend yields over 2%. They all have price earnings ratio under 25. So if you're looking at the names right now, there's a couple on here. I'm going to go ahead and be honest, I haven't heard of any of these stocks in the past. So you can see that we removed Intel. We removed a couple others that are pretty well known. So right now I'm left with a bunch of stocks I've never really heard of myself. But that's great. I'm getting exposure to different aspects, like different stocks in the stock market. There's thousands of stocks out there. And if you're, a brand new investor, you're only going to get told about the main ones, the Facebook, Amazon, Netflix, Google, your FANG stocks. So those are the ones that a lot of people are invested in. But if you're looking to invest for the long term, dividend stocks are great. I think I have a playlist on why I believe dividend stocks are just kind of really good, especially if you get some solid ones. And if your initial payout is $400 per year, and then they all bump up their payout by 10%. Now you're making $440 on your second year, plus you've applied your $400 that you got in your first year towards buying more shares. So that $400 may buy you an additional, X amount of shares that'll increase your dividend payout by another $10. So your second year, you're now making $450 off your initial purchase. And then after your second year, you're now making $525, and it just allows it to compound. They're also increasing and paying out dividends. They're giving you special payouts, and that's not including any capital appreciation. So enough rambling there. I'm going to go ahead now. In this next process, we want to enable revenue, free cash flow, and net income. Now this is going to give it to you in billions and millions, like what their actual revenue, free cash flow, and net income is. I like to look at it in a percentage. So down here towards data format, I like to look at it in percentage. So is this stock profitable in both revenue, free cash flow, and net income? Yes. Over the last 10 years, this stock has came down a little bit here in net income, but if you look over the last 2 years of 10Ks, I was going to say hourly, but the yearly reports, you'll probably see something that took place during this year. Maybe they had an acquisition, or I don't know what the heck happened with their net income, but that's where you guys would just dive into if you guys are interested in the stock, and then check out the last 2 years of their 10Ks. Of course, I like to go back at least 5 years at their annual reports, and then the last couple quarterly reports to see what kind of, what they've been up to and what they're heading towards. So this one is all green here, all positive. So I'm going to go ahead and leave that one in my list. Next one, all positive, leave it in my list. This one, we have negative net income. We have revenue here that's very low. Over the last 10 years, their revenue is only up 3%. That's less than 1% per year. So if I actually remove the net income and the revenue, the free cash flow doesn't even appear on this chart. So that means it's like a negative. So I'm going to go ahead and remove that one from my list. Continue on to People's United, all positive there. Fidelity Southern, all positive there. Idacorp, all positive there. So we're having a nice list this week. Some weeks we do this whole process and we actually have to remove a lot, and we have to make some exceptions. So here, negative net income over the last 10 years. So I go ahead and remove it. Pinnacle West Capital, negative free cash flow. This could be acquisitions, but their free cash flow has been going down ever since 2013 at a sharp decline. It doesn't look like it's picking up. You could go back over the last, six, they had these dips here back in 2008. Maybe their free cash flow is being used to pay for their dividends. Either way, I like having positive free cash flow because when stuff hits the fan, the free cash flow is going to be paying you those dividends. It's going to be their cash reserve. So I'm going to go ahead and remove this one. Next is Xena Investment Management, all positive there. And then we have positive with Ameriprise Financial Revenue. So all these stocks here have they have PEs under 25, yields over 2, increase in revenue, free cash flow, and net income. Next, sort of like a kind of like a last screener. If I want to look for something that could be at a good buying opportunity, now I select price and dividend yield. I go down here towards data format, change it back to the original, and now I'm looking for a yield over the price, which could appear to be a value buy because this is I selected 1 year. So right now over the last year you can see that this stock had a yield of 3.0 back in June of 2017. The stock price was also down at $50. It's now trading at $64.70. And the dividend yield where you could have bought it at a 3.0 is now trading at 2.56. So this stock, it's not really undervalued, it's not really overvalued, but if you had bought it when that yield was at 3.0 and you held it this entire time, you would be very nice both in capital appreciation and that dividend yield. You would have locked it in at a 3% return. So if you had $100 invested in the stock, you'd make back $3 in just dividends plus that capital appreciation from the stock. And just think about if you had $1,000, if you had $10,000 into the stock. So let's continue on here. Again, price over yield. Price over yield, you can see here, there was a time here when the yield was over the price. So these are great buying opportunities. So if you look here, this stock had a 2.55 buying opportunity, several buying opportunities back in 2017. During the February correction, you can see that this stock, it fell down very sharply, but has bounced back up, and it's actually trading at its 52-week high now, $37.61. This just hit its 52-week high again, so it's breaking its record. Here, there were great points to enter with the yield trading above the price line. Right now, the price is over the yield. Fidelity Southern, we have price over yield. This could be a great one to swing. If you're a swing trader, day trader out there, you can see these huge swings down. You buy it at, say, $20.50, and eventually it's going to rebound somewhere in this range, $22 range. You could sell it at 21 to $21.75 to play it safe, and it may fall. You'll pick it back up, and that's something for day traders and swing traders. But very interesting stock there. The pattern. Intercorp, price over yield still. There's a yield over price. So right now this stock is trending down very far. It actually bottomed out right above $12.50, it looks like. Bottomed out $12.50, bounced up a little bit, didn't hold, fell back down, hit its support line, came up a little bit, bounced back down, came up a little bit, bounced back down, but it was trending sideways, gathering its momentum, and now it is appearing to go positive. So right now this could be a great buying opportunity where you'd lock in at $12.78 for this price. You'd lock in a yield of 2.66%, and you may be able to ride this stock up back into, safety zone would probably be around 13.20, 13.25 at least. So you'd have some profits in there possibly again. This could be, you'd have to take a look at what caused them to go down so fast over the last year and what's making them currently rebound, what's going positive for their company. But right now, yield over price. Northwest Bank shares, yield over price. So it looks like this one's just been very slowly trending up. There are times when it kind of comes back down, hit its support, bounces back up, hit its support, maybe it's 200-day trading, its average, and then kind of rises, and now it's its average came up with it. So this used to be the norm down here. It rose up, and it's not trading as high anymore because it's not, it's not going to go up there, but now it feels a little bit better in this pattern right here. So this 1565 area could be a good support level. Right now it appears to be trading up. So if you bought the stock, you could lock in at a yield of 3.83. This could continue to kind of trend upwards. It is any upwards motion there. Yield over price. So this stock, look at this stock. This has a very high yield of 5.58. There were opportunities to buy this stock at similar yields back in 2016 and 2012, 2013, where we had that mini financial issue. 2013 is where I bought my house. It was a great buying opportunity. Lots of stuff out there, was very inexpensive. So this could have been one of those stocks affected. It's an investment management company. So yeah, with real estate investment properties, I could see this one being affected by those times. So right now, with rising interest rates, you can see that this one probably is what, the price. Rising rates could be affecting their price, which has dropped them down very sharply over the last few months. But overall, the stock does trend positive. So this could be a great buying opportunity where you're buying at $9.14 and you're locking in a dividend yield of 5.58%. Definitely want to look at this one. Look at its 10Ks, look at its last quarterly earnings. What's going on with it? It could be a great buying opportunity. And last but not least, we have Ameriprise Financial. Again, another yield over price. So again, this could be another great buying opportunity. And there have been a couple other opportunities. Back in 2017, the stock was trading at a yield over 2.4%, maybe 5%. If I look over the last 5 years, where was the last time between 2015, like mid 2015, this stock had broke 3.2% yield. So if you had bought it back when it dipped in 2016 at around what's that, $75 it looks like, that could have been a great buying opportunity. Rode this, doubled your money. 75, that's basically 100% return right there. Plus you would have locked in that yield of around over 3%. So this is what I look for. And then, once you get the financial metrics out of the way and you look for these great buying opportunities where the yield is currently trading above the price, now you go look at its balance sheet. Does it have free cash flow? I like to take a look at the balance sheet. I should make a video on what I look for in a balance sheet, and also areas to look at on 10Ks, on the yearly reports, and then the quarterly reports. So those are all great areas. So this is my first step when I'm doing a screening process of stocks. Then I go look at the last 4 quarterly reports, and then I go look at the last 5 to 10 annual reports. That's sort of my process to get an idea of why a stock is trading at where it's at, what caused it to come down, where it's currently at a bargain price. Is it a smart investment or not? So This week's picks, I'm going to go ahead and knock out anything that has a price over yield for the year. So let's go ahead, start back over. There's a yield over price. There's a yield over price. There's a yield over price. Yield over price. Price over yield, knock that one out. Price over yield, knock that one out. Price over yield, knock that one out. Price over yield, and price over yield. So the 4 stocks this week to check out are Capital Federal Financial, ticker symbol CFFN, Northwest Bank Shares, ticker symbol NWBI. We have Zena Investment Management, ticker symbol PZN, and then Ameriprise Financial, ticker symbol AMP. So I don't want to take up too much more time. I want to make these videos as fast as I can, but sometimes there's so much information, and this is a whole screening process in itself. So you can see all the little things. Oh boy, PZN. So next, I like to take a look at, open these stocks up individually over at dividend.com, and I like to take a look at what's payout ratio. I like to look for something underneath 60%. I also like to have dividend growth of at least 10 plus years, meaning that this stock has paid out during a recession. So the number one stock that's had rising dividend payouts for the last 8 years, has a very low payout ratio, is Ameriprise Financial. And remember this one had a trading yield right now of 5.0 or 2.33. So it's actually a very healthy price dividend yield. The price has came down recently due to rising interest rates, but this could be a good buying opportunity for the long term. It's been paying out dividends since back in 2010 with a very low payout ratio. Number 2 would be NWBI. Let's go ahead and enable this one. NWBI trading at a 3.83% yield, price at $16.96. Payout ratio is a little bit over 60%. Dividend growth for the last 2 years. And then we have number 3, we have Zena Investment Management. This one I put in number 3 because it does have a payout ratio that's very low at 14.6%. A dividend yield currently shown at a 1.31, whereas over on this one, PZN, it's showing at a 5.58% yield. So I'm going to go ahead and scroll down here and take a look at its payout. It's 3 cents per share. So this one may have cut their dividend, or maybe they had a special dividend. So it looks like they had a regular paying dividend. They have these special, they're not special dividends, but they pay out 39, 25. They pay out these very high dividend payouts. So 39 cents per share, and these are quarterly. And then they have these other little ones in there. So interesting. So they paid one out in, payout is end of 2017, November. Then they paid out again in March 2nd, and they're going to be paying out on May 18th. So those are some pretty big spikes there. So it's kind of weird that they kind of go back and forth. So they have these big payout spikes and then the little ones in between. So it looks like the big payouts have these high yields, whereas normally they have a yield of around 1.31%. So I'm going to go ahead and put that at number 4. And then number 3, we have Capital, or number 4 before the whole swap is Capital Federal Financial, which is currently trading at a 2.66. So yep, that matches. They have a payout ratio or payout of 34 cents per share, and their payout ratio is 54%, so it looks pretty healthy. These ones aren't great to buy and hold for the long term because it looks like they don't increase their dividends. They actually may have decreased it and cut their dividend here back at a time. They do have these special payouts, so what they probably did I know they had special payouts even back here. So this is a great stock for special payouts. If if you want those. But okay, so I'm making this video way too long, so let's go ahead and cover their ex-dividend dates. So AMP ex-dividend is on May the 4th, so that's next Friday. You then get paid out on May 18th. We have NWBI paying out on May 2nd, which is Wednesday, and then you get paid out on May 17th. Then you have May the 3rd, which is Thursday, and you get paid out on the 18th of May. And ticker symbol PZN ex-dividend is on April 30th, which is next Monday. So again, you always need to buy these stocks 1 day prior to be eligible for the ex-dividend date. And then you would get paid out on May 18th. So, very, 20 days between the ex-dividend date and the payout date. So those are some good looking stocks right there. So that is it for this video. If you guys did enjoy the video, go ahead and like, comment, and subscribe. Sorry for taking 31 minutes of your time. We screened about 50 stocks down, and we do this every week on Wednesday. So if you guys did enjoy the video, come back next week, take a look. I'll try and wrap these up a little bit better. I've been slammed at work and coming home at night and having to do network changes at night. So my time for writing articles on my website's been a little bit limited, but I'm going to go ahead and try and write one up next week when I'm not so busy. Of course, I'm going out of town next week on Monday and Tuesday, so we'll see. We'll see how that goes. So that is it for this video. If you guys did enjoy it, again, remember to like, comment, subscribe. If you have any questions about anything that was covered in this video, go ahead and leave a comment below. I always reply back to your guys' comments. I really appreciate those comments. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided in my videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor looking for deals, trying to help others make their money work for them. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.